Elf stock is down 70% in the last year over fears of slowing growth and also the fear of what tariffs will do to the company. But is this stock price drop an overreaction? After all, in the last 3 years, revenue growth has averaged 50% year over year. In the last 3 years, net income growth has averaged 180% year over year. So let's check out the numbers on Elf, and I'm also going to give you my 5-year outlook on the price target I have for Elf stock. Let's get into it. What's up, y'all? My name is Trey. This is Investing by Numbers. Thanks for tuning in. We talk all things stock market. We go over stocks, undervalued, overvalued. Every month I share what stocks I'm buying, and about once a month I go over my own portfolio. So if you're into that kind of thing, please subscribe. Also, I'm sure you're tired of hearing it from everyone else, but hit the like button. It really helps out channels like us, especially the small ones like us. So it'd be much appreciated if you appreciate this video. All right, so right now we're looking at Elf's price chart, and as you can see, we had huge explosive growth going on since 2022 into 2024. We had a double top up here around $220 a share, just under, and we have since just tanked. As I said earlier, this is their growth is slowing down, and tariffs are also a little scary for Elf's business model. So we've seen a big sell-off there. So let's check out the numbers on Elf. Let's see what they got going on. Revenue and profit. I'm on macrotrends.net. Down here, obviously, we can see as far as revenue goes, quarterly revenue growth looks good. Net income coming down here. Let's zoom in a little bit. So yeah, pretty good net income growth. We've had some quarters here that were a lot better. A little stagnant. Some good quarters and some stagnation here, but obviously still net income growth nonetheless. Let's come over to the balance sheet. So we've got 1.1 billion of total assets and 486 million of total liabilities. This is a good ratio to me of assets to liabilities. I like to see at least 50% or more assets to liabilities, but here we've got almost a 3x, which is great. The only thing that's kind of a downer when it comes to Elf is the cash flow. Right now we've got 108 million of cash on hand, and that roughly only covers maybe 15 to 20% of our liabilities. I'd really like to see this cash a little higher. We have had growth over time of cash on hand, but we've seen a recent kind of decline here with the amount of cash on hand we have. But still, I'm okay with it. I'd like to see a little more, but that's really for me the main negative thing with Elf is just the cash flow is a little less than I would like to see with other companies. Let's check out the PE ratio and see where this thing has been trading at over the past few years. So right down here at the bottom, obviously we after we came into profitability, we came in here, kind of went through negative net income, and then we came back into profitability, and it looked like our PE ratio is kind of balanced out, around the 50s. We got all the way down to about a 51 back in 2023. We got up to right above 100 last summer, and right now we're around a 35. So that right there looks great to me, especially with the income, the revenue growth, and net income growth we've had over the last few years. 35 is a great PE. Coming here at revenue, from 2021 into 2022, that was around 20% or so. And then 392 million to 578, almost 50%. And then roughly around 70 or 80% coming into 2024. And net income growth has been a beast. It's been, I said earlier, averages around 180% year over year just in the last 3 years. So paying a 35 PE for this kind of growth, trailing, to me is great. Even if it slows down and we start seeing 20 to 30% revenue growth and just 30 to 40% net income growth. These are still great numbers, but let's check out what my price target is looking like for 5 years out. I'm going to give you kind of my idea of revenue growth and net income growth, what kind of margins we might be looking at in 5 years, and we'll use kind of the PE range to see what kind of a price range ELF should be trading at in 5 years. All right, so we're currently trading around $63 a share right now, and we're around a 35 PE. Obviously, in the past, as far as the PE ratio goes, we've stayed above 50 since 2020 up until just recently. Now we're at around a 35. So we got all the way up to 100 here realistically, and which is pretty expensive. But with the the amount of net income growth we've seen, that's not too crazy. I mean, right now AMD is trading over 100 PE as well. But for the last 5 years, we've stayed above a 50. So, and I said earlier, over the last 3 years, revenue growth was around 50% year over year on average, and net income growth was around 180%. So one metric I do want to look at here is I want to see what we can expect a safe net margin to be. So I'm looking at net margin here for ELF. Let me zoom in a little bit. Okay, so we got all the way up to back in 2023, almost a 16% net margin, which is really good. And right now we're around, just under an 8. So to play it safe, let's say in 5 years, we've got a 10% net margin, which isn't a whole lot of growth with the net margin, but it's a little bit, and it's still realistic because obviously we've gotten all the way up to almost a 16. So let's keep things in perspective. Let's just say we have a 10% net margin. So right now, currently, the trailing 12 months revenue for ELF is $1.3 billion. So let's say in the next 5 years, we have, the first year, let's say a 25% revenue growth. Let's say second year, a 20%, then 15%, another 15%, and a 10%. All right, that would get us to $2.8 billion in revenue in 5 years. Now, if our net margins are 10%, we're going to have $280 million in net income. So we've got 56.4 million of shares on the market outstanding. So if we divide 280 million by 56.4 million, our earnings per share would be just under $5, about $4.95 per share. So let's say with that kind of growth, a 30 PE, in my opinion, is a very fair value for that kind of growth. That would give us a share price of $148.50, and on the high end, 50. And reminding you that ELF has traded above 50 for the past 4 years consistently up until recently. But let's just say 50s, our high end of the spectrum. If we're at a 50 PE with that kind of net income, our share price will be $247.50. Pretty fantastic, being that right now we're trading in the low 60s. So looking like if we just have steady growth over the next few years, even at a safe growth rate of well under half of what we have had, we should see great share prices in the near future, in the next few years. So even with a 30 PE in 5 years with that kind of growth, we're still over a double up, about 2.5 times. And obviously with a 50 PE, we'd be almost a 4X. So pretty great numbers there. I actually bought more ELF stock today. I have a small position. I added more to it today, and I will keep adding to it as long as it stays under, probably under a 40 to 45 PE. I'll still be a buyer of shares. Anyways, that's it for me, guys. Short video here, just kind of going over ELF with that 5-year outlook on price. I mean, for me, ELF is a great buy right now. I'm picking up shares. I'll continue to pick up shares as long as it stays down, and I'll be excited to do so if it goes even lower. But that's it, guys. Please remember, like the video, subscribe to the channel. I'll do more 5-year outlook price targets on different stocks here in the near future. And with that being said, I will catch you on the next video. Thanks for tuning in.